Hi everyone, Artin here with Option One Lending with another market update for you. I wanted to touch base on inflation, on rates, the Fed meeting, and the housing inventory in LA and in California. So the CPI, which is the Consumer Price Index, that's the basket of goods and services that we measure inflation against, has dropped to 3.2%. That's a drop from 3.7%, and if you remember from my videos, not too long ago, that number was in the 8 to 9% range. So that's a huge improvement on inflation, and you've, I'm sure, noticed it on cars, gas prices, everything else. So that's driven down the inflation, and also the producer price index, which is PPI, that's the wholesale prices, has dropped to 1.3%. So that's on the wholesale side, and that would mean is if the producers are buying their goods and services at a lower rate, that will translate into lower consumer prices in the coming months. So overall, inflation is great news. The Fed, remember, needs that number to be at 2%, which is an aggressive number, but we're getting there. We're at 3.2%. The producer price index is only 1.3%. So overall, all good news. The last Fed meeting was a few days ago, and the Fed decided not to raise rates for the moment, primarily driven by these CPI and PPI numbers. So overall, it's good. Mortgage rates were in the 8s at some point, not too long, a couple of weeks ago, and now we're back into the mid 7s, sometimes even low 7s on average rate on the conventional loans. So that's great news on rates. Fed will, now there's a 100% likelihood that the Fed will drop the rates, not only not raise the rates, but lower the rates in the May to June of 2024. So in about 5 to 6 months, there's a 100% likelihood that the Fed will lower the Fed rate. And the analysts are predicting that there will be at least 4 Fed rate reductions before December of 2024. So overall, amazing news on rates. Inventory. So inventory, we saw a little bit of rise in inventory in LA. As you can see here, most of that was driven by the cyclicality of the market. So, we always get higher inventory in the May, June, July timeframe because schools are out and a lot of people want to move and find a home in a desired area. And then the inventory goes down in the winter time because of, again, due to schools, the activity slows down. But overall, we've been saying it rise a little bit. In overall United States, at some point we had inventory well over 1.2 million. That was just 4 or 5 years ago. And even in 2019, right before COVID, we had inventory levels around 800, 900,000 units for sale at a given time in all of the United States. Now that number is at only a little over 400,000. So inventory wise, we're well below the norms that we see in the market. Even in LA, right now we see about 16 to 17,000 homes for sale, but that number in LA right before COVID was well above 30 to 40,000 homes for sale. So same thing applies to California. We're at half of the numbers that we normally would see in a normalized market. So inventory is low. What that means, like I always say, once rates drop, prices will continue to rise. If you can get qualified and secure a home, do it now. We'll refinance you in the next few months once the rates drop. Otherwise, you may be out in a bidding war again once rates drop and all of our buyers return to the market. Let me know if you have any questions, but I wanted to just give you a overall market update on real estate, mortgages, rates, and the Fed meeting. I'll keep you guys posted. Have an amazing Thanksgiving this week, and I'll update you again. Thank you.